Hi, Justin David here again. Following on from my previous video called PCP Finance Explained or something like that, when I got to the end, when I'd finished it, I thought of a couple of other things that some of you guys might find useful. So today I'm just going to knock together three little shorter videos. The first one, this one, is going to be talking about what I would call making your own PCP using a bank loan. I'll explain what that means shortly. The second video I'm going to make is talking about voluntary termination, but also how the way that the deal is initially structured from the dealer, how that can greatly affect your voluntary termination point. And finally, we're going to talk about a real life example, something that I witnessed a few months ago when I tried to buy, I won't name the brand, but I tried to buy a car from a used car. It was a 6-month-old demonstrator, so the finance APR rate wasn't particularly good. But the interesting thing was, and this will make you laugh when you see the calculations, they tried to get me to have their finance agreement by giving me a free service pack. And I shall explain why that shouldn't actually be done, because to be fair, I think it was mis-selling. And I shall explain why it was an actual rip-off, even though they were trying to give me something free of charge. Okay, so stay tuned. So the first video is, as I said, how can we make our own PCP? Now, I've got an example here. I've called up a used BMW on the BMW UK website. This is end of April 2017. It's for a BMW 125D M Sport 3-door with a purchase price of £15,326. Now, the example that I'm going to talk about today assumes that you don't negotiate any money off the purchase price and you pay the headline APR rate. Okay, so hopefully you would negotiate something off this, but I'm just kind of going to give you a worst case scenario. So let's say I go to the dealer and I go, okay, Mr. Dealer, I want to buy this car. I've got a £2,000 deposit cash to put in, and I want to have it over a 36-month PCP term. Something else I've just remembered. Whenever you do a PCP and you say, I want it to be 36 months or 48 months, just check carefully that you are paying 47 monthly payments in a 48-month term, followed by a balloon payment in month 48. I've had examples before where I've asked for a 36-month deal, and what they've done, they've quoted me as 36 monthly payments with month 37 being the balloon payment. So when you're trying to compare like for like, just make sure, because obviously if you're paying it over 37 months or 49 months, your monthly payment's going to be a bit less, but you are going to be paying more in the longer term. So going back to this, so we've gone to Mr. BMW and we've said, okay, I've got £2,000 deposit to put in, please. 10,000 miles a year, over 36 months. Notice there, look, that's correct. 36-month agreement, 35 monthly payments, followed by our optional final payment. Now, it's coming out at £259.86 a month. 35 payments, followed by a guaranteed future value, I won't go into what that is now because I explained it on the previous video, of 751502. So effectively you've got to pay them £2,000 up front, pay them 35 lots of 259.86, and then if you want to own the car or trade it in or whatever, there is an amount owing of £7,515 and 2 pence. Look at the APR, 10.9. So let's assume that that's the best deal we can get from the dealer. I would never pay 10.9% APR on a PCP. Look how much interest we're paying. Total amount payable, 18,611. We're paying more than £3,000 in interest on a £15,000 car. Over 3 years, not even 4 years. That's a lot of interest to pay. So what I'm going to do is give you an alternative way of doing exactly the same thing. So let's just nip over to Tesco Bank. Now, Tesco Bank are advertising a rate of 3.3% APR. I am assuming in this example that you would be able to get that rate. Now, that's not the case for everybody. So this is best case scenario. When a bank publishes a representative APR, they only have to guarantee to give that rate to 51% of applicants. So depending on your credit history, your personal circumstances, you might not get that rate. But let's assume that you can get that rate. So we go to Tesco Bank and we're going to borrow exactly the same amount of money, which was £13,326. So I want to borrow £13,326 for a car. I'm going to put it over 1 year for now. Okay, there we go. Borrowing exactly the same amount of money. Now, I wouldn't borrow it over 3 years because look, obviously over 3 years, we're paying back the entire amount, which is not what a PCP is. In an ideal world, if you could afford that, I probably would do that because by month 36, you own the car. You've got nothing to pay. You can keep it, pay nothing more. But we're talking about the PCP model. So how do we do that in a personal loan? Well, all we do, think about what a PCP is. It's a standard hire purchase agreement, but instead of having, say, 60 monthly equal payments, it has a shorter term up front with a much bigger final payment so that your monthly payments are more manageable. Let's do the same with a personal loan. So rather than borrowing it over 3 years, let's borrow it over 5 years. What that is doing is giving us 60 equal monthly payments. But there's nothing to stop us at month 36, like with our PCP example, of getting a settlement figure and paying that off. And that settlement figure is effectively exactly the same as the balloon payment here. But as you'll see in a minute, it'll be much less. So we've done it over 5 years. So our monthly payment has dropped to £240.94. So we're already saving nearly £20 a month because they want £259.86. But this is the important bit. Nipping over to Finance Calcs, which is that very good website I talked about previously, let's put the amount in. So £13,326. We borrowed it over 5 years from Mr. Tesco, 60 months, not 50. First payment was, I can't remember, was £240.94. Now remember, it's not a PCP, so it's 60 equal payments, £240.94. APR's come up at 3.3, which is exactly what Tesco said. So this is another good way of checking what the advertised APR is, and actually, is it true? Right, I want to settle this the same as my PCP, so at month 36. So after 35 months of run, watch what happens. Settlement figure. Now this will be as accurate as it can be. Though, depending on certain banks, they will add up to a couple of months extra interest when you settle early. So it could be 5,950. But look at the difference. 5,840.50 compared to 7,515.02. At exactly the same term, we've put the same deposit in, but we're actually owing £1,700 less at the end. So you come to month 36, you've paid your 35 payments, you go back to BMW or another dealer and you say, all right, I want to trade this car in. To clear the proper PCP, you've got to get at least £7,515.02 for that car. So let's say they give you the guaranteed value. Well, you've paid the finance off, you've got to start again. You've got no deposit, it's cleared. Watch what happens when you go with your loan. The car dealer goes, oh, fantastic, yes, we'll give you £7,500 for that car. You get your settlement from Tesco and you only owe £5,848.50. Happy days. £1,700 in your hand. So not only have you got nearly £1,700 more, our monthly payment is also, where's my calculator? With BMW at 10.9, it was £259.86. And with our Tesco loan, it was £240.94. £18.92 a month cheaper. Times that by 35, £662 a month. So you could put that £18 or whatever it was in a savings account And at the end, you would have £662.20 plus £1,700 more equity in the car for your next one. And it's cost you exactly the same up front with that £2,000 deposit. So I wouldn't do this with a new car because, as I've said before, dealer incentives, BMW have got an APR of 3.9 at the moment. So you're protected. You're getting that voluntary termination, you're getting, it's a protected asset. With a personal loan, it's not protected. It's not tied into the vehicle. The good thing about that is you can then do what you like with the vehicle. You can sell it to WeBuyAnyCar.com, they'll give you the money, you can pay the loan off if you wish, or you can keep the loan running and do something else with it. So it does make selling the car easier, but you haven't got that protection that you get with a regulated finance agreement. So I wouldn't do this with maybe a brand new car, but with a car where the best rate you can potentially get is 10.9%, I would try and get, even if you get 5.9, 6.9 somewhere, you're going to be a lot better off. So I hope that was useful. I hope it makes sense. Please comment, subscribe, share this video. If you've got any questions, do please leave a comment below and I'll get back to you straight away. But I hope it's opened your eyes as to possibly another way of financing a car using exactly the same kind of principle as a conventional PCP. Okay, thanks for watching. I'll see you again soon.